All right, welcome back. Today we're going to chop up Atlas Crest Investment Corp, ticker symbol ACIC. And this has been nestling around the $10 mark, but you can see recently it's shot up to just under the $14 mark. And this is on the announcement of their reverse merger with an all-electric vertical takeoff and landing company called ACHR. Now, ACHR aims to disrupt the transport sector by introducing air taxis in 2024 and then start commercializing from 2025 and beyond. Now, in light of that fact, I personally see this as a long-term opportunity. It's currently not in my broker of choice because I definitely would like to invest in this within my ISA. But for me personally, this epitomizes where the world is going. They've got extremely ambitious goals, but if they are able to achieve those goals, which I feel they've got a very long time to do so, then I think it can be very rewarding for shareholders. And I've said on many occasions that I personally believe we're at the cusp of a significant wave of technological advances. I mean, this is some Jetsons, Tony Stark-ish right here, which we're going to be talking about and getting into it. Just to put this in perspective, in short, at a snapshot, what this company is, it's basically an affordable electric Uber for the skies. That's the way to think of this company. I like Ubers. I like flying. I like electric, so listen, I'm trying to be evolved. So listen, this deck is extremely large, so it's one for you to do your own research and have some bedtime reading. But I'm going to talk through a few of the key slides that I think, deliver some important information that I want to share with you today. So let's get straight into it. But obviously, you can always go away and do your own research if you want to find out some more information. Now, we can start with this slide here. So this basically shows the two founders of Atlas Crest Investment Corp, the actual SPAC. And you can see that they've got a lot of experience in mergers and acquisitions and investment banking. But in the case of Michael Spalacy, you can see that he's got experience not only in data and analytics, AI technology, but also in the aerospace and defense industry. And one thing that's also mentioned on this slide is that the urban air mobility will transform how people approach everyday life, work, and adventure, all while benefiting the environment. So this is extremely disruptive. And this is going to be potentially a cultural shift in the way we actually behave when we actually get into some of the later details in this slide. Here you can basically see that they're going to change their ticker symbol from ACIC to ACHR when the merger happens, and that's expected to close around Q2 of 2021. In terms of the capital structure, they're going to be given $1.1 billion, $500 million will be put in a trust, and $600 million will be straight proceeds that they get, and this is all to fund future growth of this business that they're going to basically be creating. Now, I'm going to skip over this slide because there's a lot of information that we're going to cover off twice if I talk about the stuff in this slide. So I'm going to get to some of that later on. You can see here when we're talking about the team, the two co-founders are from a company called Vettery, which is essentially a recruitment HR technology platform firm. I'm hoping this means that they're good at hiring the right people for this business. But the key thing when you're looking at a business like this, at least from my personal perspective, I mean, there's probably many key things, but one of the key things I look at, because it's a technology business, I look at the engineering department and obviously what are their credentials. So you can see here that the chief engineer is from Airbus, which is obviously, one of the two biggest, aeroplane manufacturers. If not, this is the biggest. I think they're bigger than Boeing actually. And then you've got Whisk, which is an electric vertical takeoff and landing company, but actually in Australia and New Zealand. So you've got the experience from the electric side, you've got the experience from the traditional aircraft side, obviously working together to obviously be the engineering partnership. And I think that's going to bode extremely well for this business. You've also got some more people in terms of, head of design from Mazda. You've got a Tesla alumni here as well, which is more in the marketing department. But incidentally, although it's not the engineering department, the marketing department for Tesla can actually be attributable from a shareholder perspective. It's the reason why it's actually grown and scaled so well. They spent zero in marketing dollars. It mainly was from referrals. And Tesla's brand is obviously unparalleled. So, I think that also potentially could bode well for ACHR going forward, if they continue, really strong marketing efforts the way that Tesla potentially has. Now, you can see here that the total addressable market is expected to be 3 trillion by the year 2040. So you're looking at, an area that currently doesn't exist, but is expected to be significantly higher in the next sort of 10, 15 years. And obviously by 2040 it'd be worth 3 trillion. I think it's probably even going to be more than that if this actually obviously manifests. And so, you know, they've got a huge total addressable market, and that includes some of the other areas that they're going to be potentially looking into as well, which we're going to cover off a bit later on in this video. Now, the key thing to take from here is that they've got some strategic partnerships. Stellantis is one of the partnerships which is going to help in the manufacturing and the parts side of the business rather. But the key thing here is the United Airlines partnerships. United Airlines is obviously one of the biggest airlines in the world, and they've obviously done an order of 1 billion for into ACHR, but also for an additional 500 million worth of aircrafts as well by 2024. This obviously is one of the largest FTOL purchases in history, and they're a key equity holder and strategic partner. So, you know, you've got Airbus people, you've got Whisk people, you've got United Airlines back in it, and I think all of those factors really make a nice melting pot of, you know, quite a secure investment. Obviously, there's a lot of risk with what they're actually trying to achieve, but with United Airlines backing it, I think things like getting certifications, being able to have some of the infrastructure in place to actually make this a reality, I personally believe that this bodes well for this business, which is the reason why I feel like it's pretty strong. Here is obviously, you know, more slides around the team, and then we get into the product itself, which is called the Maker. Now listen, the Maker is quite a beautiful aircraft if you ask me. You can see here that it's actually 10 times, it's actually way more affordable than an Uber X, which we're going to get into a bit later on in this video. It's 10 times faster than a vehicle in terms of getting you from wherever you need to get to. It's 100 times quieter than a helicopter, even though it's obviously got some of the mechanisms that a helicopter needs in terms of to do that vertical takeoff and that vertical landing. And it's got 0 emissions, so it's completely, you know, carbon emissions free, which I think is obviously something that most investors are really looking into. It's a really hot space to be in right now, and I think that's definitely going to bode well for this company and obviously for the environment going forward into the future. Then you've got a slide with, you know, a couple slides of this East African sweet one. This is all to do with that Tesla. This is that Tesla marketing right now. You can just see it right before your very eyes, trying to lure in the mandem. We're going to go into the next slide, and you can see from this slide some more information about the United Airlines deal, which I think is obviously going to be extremely important. Now, on this slide, there's some comparisons, and these comparisons show you that from certain destinations to certain other destinations, you can see the time it takes from an Uber to get there versus, you know, an ACHR. So it's like, you man might take an Uber, I'm just going to ACHR there, you feel me, and I'll get there like 10 times quicker than you'll get there. So you can see here from San Francisco to San Jose, it's going to take an Uber 1 hour and 40 minutes to get there. It's going to take Caltrain 2 hours and 21 minutes, but it's going to take ACHR 17 minutes. And from New York City, so that looks like Manhattan, Lower East Side, you know, to JFK. I'm acting like I know about New York, like I'm really in the Bronx like that, man. Just ignore me, man. Listen, from New York to JFK, you can see that an Uber is going to take 1 hour and 25 minutes, and an ACHR is going to take 7 minutes to get there. So that's obviously a significant reduction in time. But what you want to see is that reduction in time also equates to a reduction in cost, which it absolutely does as well. So you can see here, in terms of time to get to certain destinations, a personal vehicle will be, so this is from Manhattan to JFK, so this is that, you know, that little Lower East Side example we're talking about. Personal vehicle, 60 minutes, an Uber X, 70 minutes, an Uber Pool, 77 minutes, because it's going to be picking up some people along the way. A helicopter is going to take 22 minutes, but it's going to cost you $1,700 in the process, whereas these are going to be like $76, $59, and obviously this is going to be your own car. But an ACHR is going to also take you 22 minutes. However, it's going to be a fraction of the cost of a helicopter and a comparable cost to an Uber, and actually a cheaper cost than an Uber, to be fair. And, you know, we're in a world now where a lot of people aren't really going to be wanting to own their own vehicles. There's a lot of, you know, startups, you know, trying to do this kind of renting vehicles and, you know, subscription vehicles rather than, you know, actually buying your own vehicles. So this personal vehicle, though it could be cheaper if you got that, you know what I mean, got that Suzuki, got that little, you know what I mean, got that Kia in that, got that Nissan Micra in that, it might be a bit cheaper, but not a lot of people might be using that vehicle. So I think ACHR shows that it can be an extremely low cost solution, no emission solution, not even low emission, no emission solution, and a very quick solution in terms of getting to these airports. What you can basically see here is that Uber for each individual vehicle is roughly $136,000 that they make on an annual basis, which sounds extremely, sounds good. An Archer aircraft is going to make 2.4 million per aircraft. That's per aircraft. So that is an extremely significant amount of revenue that each aircraft is expected to generate on an annual basis. You're talking about a 1,600% increase, if you from an investor perspective. And then when you actually break down some of those numbers, the top line revenue will be 2.4 million. The cost to operate that will be 1.4 million. So the proceeds, the GP, you're looking at the operating income is 1.1 million per aircraft, which I personally feel is extremely significant. Now, we're just going to go all the way down. Actually, you can see from this slide, I think, this slide's quite important. Here it shows some of the competitors. So I talked about Whisk. You can see that there's other competitors like eHang. I know some of you guys have been investing in eHang as well and made, about 200 or 300% investing in eHang. So there could be some short-term growth opportunity. Like I said to you, I'm not looking at this as a short-term opportunity. I'm not looking at this as a trade. I'm not saying that you can't trade it. You probably could and make a nice little buck. But I'm definitely looking at this from a long-term perspective. But, the key thing for me is their key partnerships and their order book. You can see here, there are no orders for any of these other companies, not one. And in the case of key partnerships, you can see that, you've got United Airlines, whereas here you've got some key partnerships, which are more like vehicle partnerships, to be fair. The only one that's actually got an airline partnership is obviously Whisk, and some of those ex-Whisk guys have now come to the Archer side. So I think that's going to bode well for Archer. And Boeing's got a bit of a sus track record at the moment, especially with their whole 737 MAX situation. That these planes just keep on seeming to have functional problems and just disappearing from the sky. So, I'm not saying that's actually going to be significant in this, but I'm just saying that overall, when I look at this picture, I'm seeing Archer as the clear favorite and the strongest out of all of these options in terms of a competitor perspective. Now, we can go through their technology, but we'll be here forever. Essentially, I think that's something that you should definitely be looking into for your own time. We're going to talk a little bit about this slide here, which is their future revenue opportunities. And so obviously you've got the whole air taxi space, which is the stuff that we've basically been speaking about, and the amount of revenue they can potentially make in that space alone. But they're talking about other revenue opportunities. You're talking about cargo, you're talking about military, emergency services, which I think could definitely be a big one. You talk about regional expansions to different geographic territories, and then also business charters. So listen, my personal summary is that I think this is a really exciting opportunity. Like, I try and talk about, I do talk about other stocks that I don't potentially invest in because, you guys give me stock recommendations, so it's only fair that I cover others. But there are times when I try as much as possible to talk about things that I actually genuinely like and see a long-term opportunity. So yeah, in terms of how I'm personally going to play this, I can't invest into this right now. Currently it's at $13. It might go to $20. It might go to $25 or $30. It is what it is. When it's available in my broker and when I can invest in my ISA, I will definitely initiate a position and continuously be adding to this position. I'm sure they're going to have a lot of bumpy, ups and downs over the next, few years. But I'm willing to take the risk that if they're able to achieve this, that I will have a sizable position in something that's going to be quite significant in terms of the future landscape. Like we saw before, this aircraft, I think, once is very stylish, very beautiful in terms of its design. I think from a competitive perspective, I think they're doing really well. The margins and the revenue from a financial perspective is looking extremely desirable. Obviously, they've got the East African thing here, so, not much more needs to be said on that one. And then, you've got a very, very experienced team with the United Airlines backing. So overall, I see Archer as a very, very, very good long-term investment. Obviously, it does come with its risks, but I definitely think there's high reward as well. Hopefully you found this video useful. If you did, like, comment, subscribe. Preemarket, I'm out.